Hey traders, welcome back to another daily profit and loss recap video. Today is Monday, August 14th. I just finished up trading for the morning and I locked in $1,323 in profits. I had two trades today, both of which were winning trades, and in today's video, we are going to break down these two trades, talk about my entry points, my exit points, as well as my thought process behind the trades, so that hopefully you can take something from my trading and apply it to your own. Now, before breaking down the trades themselves, I want to mention that both of my trades today were from the Market Master Group's trade plans. Every single night we post trade plans with detailed entry points and exit points and kind of the overall technical analysis behind the trade for our team of traders to take on the market the following day. So if you're interested in seeing these in real time and trying them out for yourself, there's going to be a link down below in the description for you to come join us in the Market Master Group. Alright, so today, because I wasn't crazy with any of the stocks that were gapping up in pre-market, I decided to kind of just focus on some of the stocks from the trade plans, and the first of those is going to be the stock RGTI. The trade plans were that this was a killer gap and go with an opening range breakout from the $1.98 level in the trading chat on Friday. Based on the after hours price action, this is setting up for a gap up on Monday, which would be bullish for a continuation or at least for a retest of the $2.75 intraday high. I'll be looking for another opening range breakout to go long, and sure enough, that is exactly what I ended up doing. We got ourselves a small gap up from the previous day's close. We get an opening range breakout price of $2.47. So if we just go ahead and draw that on the chart here to visualize, this is going to be our opening range breakout level. We can see that about 15-20 minutes later, the stock ends up breaking out above that opening range breakout level. As that was happening, I reminded our team of traders to check out RGTI. It was starting to look interesting from last night's trade plans as it was starting to break above that opening range level. And what I ended up doing in terms of entering the stock was I waited for that breakout to happen, and then I bought a portion of my shares into this dip that happened here back underneath that opening range breakout level. I liked the volume that was coming in during that breakout, and then I liked the fact that this was starting to hold the VWAP even though it pulled back underneath that opening range breakout level. So from there, once it started to once again push above that breakout level, I added some more shares into this position, and I ended up with a total of 3,500 shares, and my average price was just under $2.50 per share. I locked in a portion of my shares as it pushed up into the 275 area. The reason for that is because the high of Friday's move was $2.75 on the dot. And we can see that it does push up here, hits a high of $2.74, and then it starts to pull back a bit. So I was lucky to have locked in a portion of my profits up in that area. I just pretty much immediately, once I got into the trade, set a limit order to sell and lock in some profits up there. Just in case we ended up getting a very quick spike to the upside, I wanted to make sure that I didn't miss out on locking in some profits. And then it starts to bounce back from that dip. We get ourselves a little bit of a rejection candle right here at 11:25 in the morning. That to me was looking like it was a bit of a false breakout setup. It was starting to push above that 275 area, but then immediately gets rejected back down on pretty high volume. So for me, I was expecting it to start dumping back down at that point. And that's where I locked in the rest of my profits. Ended up with $922 in profits on the trade. And it ended up being a really solid trade. So far, I've gotten out at a pretty solid exit point as it has kind of pulled back a bit and it's just kind of trading sideways. So yeah, that was a really solid, pretty textbook opening range breakout setup straight out of the Market Master Group's trade plans. Moving on to trade number 2, this is with the stock TSAT. Once again, if we take a look at the trade plans, we were looking for a continuation here because on Friday, this was a very tricky stock with tons of false breakouts and false breakdowns. That being said, there very easily could be many short sellers trapped for a potential squeeze on Monday, so I'll be eyeing for another move up. If there's a morning dip, I'll be watching for strength around the $12 area to grab some shares, but otherwise I'll be looking for a push above $13.50 as a bullish signal that momentum may be picking back up. So pretty much right away at the market open, I sent out an alert to the team that TSAT from the trade plans was setting up very nicely as it was starting to show strength in that $13.50 area. At the same time, I decided to take a starter position in the stock. I ended up only holding on to that starter position because it did move in my favor very quickly. I didn't really see any good opportunities to add more size into this trade, but I ended up with 500 shares right at about $13.70. And if we take a look at the 1 minute chart, this is what I was looking at in terms of why I decided to sell and lock in profits. We see that it has this nice push up to $14.75. What I want you to notice at the time is the volume candles that are coming in. The volume candles are 2, even 3 times the size of the previous volume candles. And on top of that, we get ourselves another rejection candle that happens right here at 9:42 this morning. It pushes back up to that 1475 area and gets rejected hard straight back down to the low 14s. So I took a portion of my profits right then and there, just in case this ended up getting dumped all the way back down to 13. At that point in time, I also moved my mental stop loss up to break even. So if it pulled back down to $13.70, I would have just sold the rest of my shares and had a very small gain on the trade, but it got very close, ended up bouncing back up, and I locked in the rest of my profits as it retested that 1475 area, which sure enough turned into resistance as it gets rejected straight back down, and I would have ended up having to stop out at break even on the rest of my shares if I didn't lock in my profits into that push. So on that trade, I ended up with $401 in profits, which brought my overall profits for the day up to $1,323. So a few really solid, quick, and stress-free trades from the Market Master Group trade plans. That being said, since those were my only 2 trades today, and this has been a relatively quick video so far, I did want to go over one of the questions that was asked today in the Market Master Group. So the question was that when buying the opening range breakout, do you try to buy slightly below that price if you're seeing the price moving up and headed that way? I tried to buy TMC at 158 this morning, but it seemed to have shot right past that and was up to 165 within seconds. So let's go ahead and take a look at TMC very quickly. TMC was a stock gapping up this morning in pre-market. 157 was the opening range breakout level. So if we go ahead and just draw that on the chart, this is what we're going to be seeing. And what we can see is it does have a very quick push through that 157 level. Spikes all the way up to 175 and comes straight back down. This type of price action is not all that uncommon, and that's why trading the opening range breakout can be a little bit difficult, even though it is one of my favorite strategies to trade. If you're not very quick to lock in profits in certain situations, and if you're not yet comfortable with tape reading, which is the level 2 in the time and sales, then this strategy might not be for you. But the question here is how to capitalize on these quick moves without missing out on such a big portion of the move. So simply put, I would not necessarily recommend buying underneath that opening range breakout level. Opening range breakout levels often become resistance, and that's why they are a breakout level. So buying directly underneath resistance is a very risky way to trade. But if you are buying this breakout, what you could do is you can use a stop order. Stop orders are most commonly used, of course, for managing risk and for cutting losses, but they can actually be used to enter into a trade as well. So if we have ourselves a breakout level of $1.57, what you could do is you could place a stop order to buy at $1.58. And that means that it's going to buy your shares as soon as the price hits $1.58. I would really only advise doing this for very quick scalps to the upside. You're going to be looking for a very quick profit, usually within seconds or minutes, to lock in profits into that momentum and into that breakout. But if that's the strategy that you are looking to capitalize on, then using a stop order to enter into these breakouts is a really good way to get into them very quickly. Alright, so all of that being said, those were my trades for today. Again, I ended up with $1,323 in profits. I hope you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. And of course, if you want to hear about these stocks that I'm trading in real time, as well as work with our team of traders, get access to our day trade and swing trade alerts, our detailed trade plans, our live custom scanner streams, and so on and so forth. All of that can be found in the Market Master group. There's going to be a link down below in the description for you to get signed up. But anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.